Okay, so January 22nd, so that's Jan 2, what time?
5:30 to 6:30.
You guys are all invited to come to my office January 22nd from 5:30 to 6:30, and I'm going to dive a little bit deeper into real estate investing. It's going to be pretty casual. We're going to have some food, we're going to have some drinks, and it's kind of going to be a Q&A of if there's ever been anything that you've wanted to know about real estate investing, even if you don't own a house yet. This would be a great kind of low pressure way to ask me whatever questions you have. You can also always send me a message through Facebook or Instagram or call me or text me or email me, whatever. But today we're just going to touch on one of the things I'm going to talk about on January 22nd. So I'll leave that up there. So this is basically just real estate in general. I don't know much, but I know a lot about that. And I need a new pen. So let's start with mortgage hacking. Do I need to bring this closer?
No.
Okay, so mortgage hacking is the idea of using a lower down payment option to acquire real estate and then to make money with that real estate. So typically, if you're going to invest, you need 20 to 25% down. So that means if you have a $400,000 fourplex, duplex, triplex, or whatever you want to buy, you're looking at $80K to $100K in cash to get started. And obviously for most people, pretty much for everyone, that's a lot of money. Like, okay, cool, I want to be a real estate investor, but how do I pay my bills, live my life, put gas in my car, eat food, and save $100,000? What do I get this done by the time I'm 70? Probably not the best option to wait, right? Because we know that on average in the long run, real estate is going to go up in value year over year, 4%. Last year was a little bit slower year for us. In Jackson County, went up 5%, 5 and change. So if we know that you've got income, you're relatively with it, we can mortgage hack. So the first step would be, if you don't own anything, to utilize an FHA loan. That is 3.5% down. So now that fourplex, that's, let's call it $500,000, you need $17,500. I hope my math's right. So which one is less, $17,500 or $80,000? Hey, we got a winner. So if we can get you into, and that's a $500,000 fourplex. There's duplexes out there that are $250,000. So 3.5% of $250,000. If you go a $250,000 dupie, that is $7,500 plus $3,750, $10,000. So let's go $10,000. Can $8,750. Thanks, Ben. 8,750. This is terrible. Can you come up with $8,750? Buy a duplex, live in one side, and rent the other out. What do you guys think a $250,000 duplex is gonna rent for one side?
If it's
one side's gonna be 13 to 15.
depends on how many beds and baths, but that's
Okay, so we'll go mortgage hacking. So you're a first-time home buyer. You've got your FHA loan. You have $8,750 into the transaction. You paid $250 for it. So your payment on this, how about $1,500? Does that sound about right?
Yeah.
So if your mortgage is $1,500, that includes taxes and insurance, and we can rent one side out for how much? $1,000?
Yeah, let's go 1,000.
Okay, so now you have $1,000 income. That means that you bought a $250,000 duplex. The renter's paying $1,000 a month. Your cost is $500 a month. You own your own house, and it costs you $500 a month. Pretty cool. So you do that for a year. Then what happens is you rent this out for $1,100 a month, and then rent here goes up to $1,100. Now, you're a real estate investor. Your payment's 15. Your mortgage is, your payment's 15. Your income's 22. That's a net of $700. Figure $200 for maintenance, whatever. Now you're cash flow positive, $500 a month, or $6,000 a year. Right? So this $500 a month is now helping you pay the mortgage on the next place that you buy. So you go from buying a multi-unit, a duplex, your next buy within 1 year or whenever you can get that money saved up, but you should be saving some dough here, right? Because you're probably paying what, $1,200 to $1,700 a month in rent now. So if you go from $1,700 to $500,
Save
you're
that
saving
12.
$1,200. 1,200 times 12 is $14,400. Now you have $14,400 to go put 5% down, 3% down, or a 0% down on a single family house that you live in. And that payment, let's say it's $1,500 a month. So now your $1,500 a month is bumped down to $1,000 a month because you have cash flow from your duplex. Your duplex gave you the money for the down payment on the next one. And now it's knocked your payment from $1,500 on the house that you now live in to $1,000. Now you're saving $500 a month. 2 years later, you'll have $12,000 saved up. You can buy another house with a low down payment, turn this one into a rental, and it'll probably rent for more than the payment. So those are the kind of things that we're going to talk about in the real estate investing course. Like, I don't have much cash. How do I get started? There's definitely a way for everyone to be able to get into properties, get positive cash flow, and do it all without doing the $80,000, $100,000, $200,000 down routine. What do you guys think?
Love it.
Epic.
Does that track?
Yeah.
Okay. So yeah, let me know if you guys have questions out there in the interwebs. Thanks, Kat.